Hello everyone, today we're gonna be talking about the top 5 skills we have to develop if we wanna be successful investors. Whether we're just starting out or we wanna refine our investment skills, these traits are essential for long-term success in the financial markets. So enough with the chit chat and let's talk about the first skill that we have to master. Number 1, patience. It might sound cliche, but patience truly is a virtue in the world of investing. We have to accept and we have to understand that the market is a long-term game. Instead of chasing quick gains or panicking in market downturns, we should be focusing on our long-term goals and our strategy, allowing our assets to grow over time. Let me share with you guys a quick story to illustrate this. Back in the early 2000s, many investors were caught in the dot-com bubble. Those who lacked the patience and sold their stock during the crash missed out on the significant recovery that followed. On the other hand, those who chose to hold on to quality stocks had seen significant gains over the next decade. Patience is about understanding the power of compound growth. Let's take a simple example so we can understand the effects of compounding. Let's say you invest $10,000 in a stock. That stock has an annualized return of 8%. That initial investment of $10,000, again with a stock that has an 8% annual return, will be worth around $14,693 after 5 years, just by holding the stock without adding more to that initial investment. Now just imagining that stock having a dividend and also adding more and more money to that initial investment. That's the true magic of compound growth and patience at work. Next we have discipline. Usually investing requires a structured approach and sticking to it, no matter what the market throws at us. We have to set clear rules for our investments. For example, when to buy, when to sell, and how much risk can we take on. Emotions shouldn't dictate our decisions. Instead, we must follow our plan with discipline, even when it's tempting to deviate. Now let's talk a little bit about one of my favorite methods to invest my money, dollar cost averaging. Basically, what's dollar cost averaging? You'll be investing a fixed amount of money at regular intervals, regardless of the stock price. This method is pretty simple and straightforward, it mitigates volatility, and it takes the guesswork out of trying to time the market. Discipline also means having an exit strategy. Knowing when to sell is just as important as knowing when to buy. If by any chance, if any of you guys are interested in seeing what I buy, when I buy, and at what prices I buy stocks, please check out my new Patreon page. Even though it's only a couple of months since I started posting there, you will find that I'm sharing my experiences and methods that work for me when it comes to managing my money. By subscribing to the Patreon page, you'll have access to bi-weekly stock buys, an insider view of my portfolio, and much more. Once more, by any chance, if you want to learn more about my financial journey, you'll find the Patreon page in the pinned comment. Number 3 on the list would be risk management. Understanding and managing risk is crucial. We should diversify our portfolio as much as we can, use stop loss orders so we can avoid significant losses, and also we shouldn't invest the money that we can't afford to lose. Going back to diversification is one of the most effective risk management strategies. If we decide to spread our investments carefully into different asset classes, industries and sectors, we will be reducing the poor performance of any single investment. If we own a mix of stocks, bonds, real estate, any downturn of any of these won't devastate the whole portfolio. Another important aspect that we have to understand is our risk tolerance. Are we more comfortable with taking higher risk but potentially getting a higher return, or do we prefer more safer and more stable options? Knowing our risk tolerance will help us make better decisions that align with our financial goals and comfort level. Number 4 on our list will be continuous learning. Financial markets are always evolving, and if we aspire to be successful investors, we should keep up to date with the newest trends, the newest tools, and the latest strategies. Let's take for example Warren Buffett. I think we all know him as being one of the most successful investors of all time. He said that he spends almost 80% of the day learning and reading. So what we learn from this, we should try our best to have a little bit of time so we can improve on our skills, so we can learn day by day new things and keep up to date with the latest trends. This habit of continuous learning was one of the key factors of his success. Whether it's reading annual reports, investment news, or other investment books, we will always have an edge in the financial markets if we stay informed. Besides reading, you can join investment clubs or forums where you can share strategies with other investors. Networking with like-minded investors will keep us on track and keep us up to date with the latest market trends. Speaking of research, I would like to share one of my main tools for financial insights, Seeking Alpha. The platform was instrumental in improving my investment decisions. With Seeking Alpha, you will have access to great articles, a lot of useful information and financial insights that will help you make better decisions while investing in stocks. So if you want to check out Seeking Alpha, you will find the link in the description below. Last but not least is emotional control. The stock market is like a real roller coaster sometimes, with a lot of ups and downs. And it's pretty easy to let fear and greed take over. Most of the successful investors try to maintain a calm and rational mind even when the market has a lot of volatility. A great example would be the financial crisis that happened in 2008, when many investors panicked and sold their assets at a loss. However, those who kept their emotions in check and also invested in great companies saw their portfolios recover and even grow over the years. To keep it simple, emotional control is necessary to avoid making impulsive decisions based on short-term market movements. Pretty simple and straightforward technique that we could use to manage our emotions will be just to have a solid investment plan and sticking to it. Having predefined rules on when to buy and when to sell will reduce greatly the emotional stress that the market volatility creates. So there you have it, some of the key skills that each investor has to master if they want to be successful, of course. Patience, discipline, risk management, continuous learning, and also emotional control. Cultivating these skills, these habits, will help you start strong in your investment journey. It will take time, of course, but with consistency and also discipline, we will eventually reach our financial goals. Before I leave, I want to ask you guys a quick question. What other skills that we should be improving on so that we can be even more successful in the world of finance? Thank you guys for watching. I hope that you will find some useful information that will help you in your financial journey. If you have any questions or comments about this topic, feel free to leave them below. And if by any chance the video was helpful, why not give it a thumbs up or even subscribe to see what's coming next, and I'll be seeing you in the next video.